Trading 360. I'm Nicole Pedalides. It's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist, BullseyeOption.com. I know you do a lot of technical analysis and trading here, Alan. What are you thinking today when you're looking at the markets?
Well, it's interesting to see that, we back down, but we haven't taken out those lows. So what we need to see is a test of those lows and reject, and then a higher close. So, there's still some work to be done, but let's remember 10% pullbacks are common in the marketplace. And you know what's also commonplace? A full comeback each and every time in history. So I'm not one to say that we're not going to come back from this. I like how things are set up. We needed to see some unwind, but the key variable, and Bill was talking about it in the last segment, the key variable is the dollar. The dollar decline in the long term is supportive of metal markets, commodity markets, and obviously stock markets as well. So, we've had a sharp decline in the dollar. Now, was that intentional? Was it engineered with all this tough love talk? Maybe so. And so, that in the long run should be very supportive of stocks.
All right. First up, Supermicro, a name that certainly has had a lot of volatility, had some pressure on it over at the NASDAQ, made it through that, but it's down. It's down off of its recent little peak. They did now announce and unveil a new server that they're talking about, and so that's some good news there, and they've also gotten some funding, which was some good news. But this was a darling. What happens now?
Well, we made that low in November, and that was the shakeout that we were looking for here. It had bullish divergence of the fact that it made new lows, but not new highs and implied volatility. That was a sign of a sentiment shift, and it's been stable since then. So the longer it trades sideways and shows that stability, the stronger that stock is. Let's remember, this was at $100 in July. We're trading at 41 right now. So we've been between 30 and 60 since December. So 45 is where we want to push above that midpoint. And if we push above that midpoint in the range, then we should push to the range top at 60. We're also holding the 50-day moving average, which is very significant at that 35 level. So that's a very important support point to look at. The way I'm looking to play this is with a June 35 call, which is deep in the money, obviously. It's trading for about $12 right now. And if the stock can make this top just to this recent range top, since December of 60, this option will gain 100%.
Okay, so we'll watch. Let's see. Let's see what Rick says about the technicals. Rick.
Yes, so when we look at this one, there's a notable point that we have failed to overtake, and it's back here at 67 level. That was a low point from here, and then several more times there. We never quite made our way back up to it until right here where we failed at this point once again. So 67 to the upside is a key area, and then that 47 level that Alan mentioned roughly coincides with our purple 252-day exponential moving average, which comes in at 46.20 right now. So a break above that level would be matching up with a key technical indicator. You can see, though, that although RSI is still holding on to its green trend line here, sloping upward, going across these lows, we aren't really making a convincing push above that 50 midline that demarcates bullish and bearish momentum here. So that would be the next step, would be a strong push above that level and a matching push above these resistance levels at which we are faltering once so far today. 41.25, our 21-day EMA, haven't quite managed to stay above it so far. If we were to look at our volume profile and standard deviation channel studies, we can see the area where we are right now. There's quite a bit going on. It's the volume profile point of control, the area of heaviest trading, coming in at 42, and then just above that, coinciding with our purple 252-day EMA, is our +1 standard deviation channel, which is 1 standard deviation above our blue linear regression line right here, our line of best fit. So resistance up here, 42, and then again at 46, support down here at our gap low point, and then our linear regression line, so around 24.50 and then 21.
Okay, thank you for that. And he's showing you the resistance areas. Alan, final thought there.
Well, my thought is that if it pops above 45, it's heading to 60. So you're going to, take advantage of that. And, if it, I don't need to get to 67. I just need to get 60. And that option is going to gain 100%. And guess what? If you want to get out of half your positions, you get your money back, and then it's a free trade from there.
All right, so up next we see the Colgate-Palmolive trade. The company did note in a conference yesterday they are seeing some hesitancy from the consumer. The stock is well off its highs of 109, but off the lows too of $85. Some of your thoughts here, Alan?
Well, two things that I look for. I look for this bullish divergence bottom that we had back in February where it made new lows but not new highs and implied volatility. The sign that the fear was not there, even though the stock was at lows. And also this money flow. I'm seeing money flow into this stock, and you're seeing a nice bottom base be built. We've been between 85 and 95 here since November. A breakout of this range targets 105. So what's really interesting that it tested and rejected the October levels, and then it's bounced since that time. So I'm looking at a June option, a June 85 call, bottom of that range. The 85 calls trade for about 8. The stock's at 91 or so it's $6 in the money. And at 105, this option is going to gain more than 100%, almost 150%. So it's about math, it's about probability, it's about follow the money. And that's what we do here each and every week.
Okay, exactly. And everybody loves the big three, I have to tell you. Rick, your thoughts on the chart?
So this one, we have, once again, some shaded areas that we're looking at here. These are going to match up with our volume profile areas, but I wanted to highlight them because they also are kind of congestion areas in terms of our price activity. So we can see that we are having the situation where our three moving averages that we follow, yellow 21-day, orange 63-day, purple 252-day exponential moving averages, they're all clustered together right on top of each other. This typically indicates that either the trend is so choppy that there's not really a clear direction or that the price action is moving sideways. Seems like it's perhaps more of the choppy part here because we had these big swings to the upside and the downside. It's not really giving us a clear directional push. So for now, though, we are below our moving averages, below this big cluster of technical activity, and we've also broken below our upward sloping trend line here after the breakdown came after we failed to break above this 98 level here, this red line here, a frequent stopping point for price after we had this eventual breakout back here. So we stopped at a key resistance point and we broke down through a couple measures of technical support. So in the shorter term, perhaps a bit more of a precarious situation here. RSI did break through its green trend line as well, and now we are at that 50 midline here. So if we were to assess our support and resistance levels here, we can see that right to the upside right here, linear regression line, volume profile point of control, match up right around 94. So that could be one area to watch to the upside. And then that red line, 98, that's another one to keep in mind there. To the downside, once we start getting here, 89.60, that was a recent low point. It kind of opens the door to the relative other low points here for the year around 85.32, Nicole.
Okay, thank you for that. Last but not least, should we, a final thought here before we get to Zoom video, Alan, because I do want to talk about Zoom.
Well, we're still talking about the important points, and what we're looking for is in Colgate for it to get above move it above the 95 level, which is a 200-day moving average. And if it does that, then it can fill in that gap at 99, and then we'll be close to taking profits based upon our money management. So that's what I'm looking forward to do. And June option has plenty of time, and being long from 85 is a very, very solid level to lean on.
So thank you for that. And next up is Zoom video. And, maybe you would have thought Zoom might have had more of a pop on the idea that Microsoft, it sounds like they're going to be shutting down Skype, which was a competitor. It's not really getting much of a pop. Some of your thoughts on where this could be headed and why?
This is a perfect example of back to the breakout. So we went between 70 and 90. Since November. We're coming back to that breakout of the 70 level. We're also seeing the money flow in this stock. And so we'll look to see how we can hold this, this 200-day moving average, which is a very important level to lean on. Overall for the year, it's been between 55 and 90 for a year. So 72 is the midpoint magnet of this stock, and that's where we stand right now. So it's about risk reward. It's about leaning on levels. There's a gap up above at 80. As well. So I'm looking at the June 65 call, which is below this support point, and looking at that option trading for about 11. But, I do like the way that it's come right back to the breakout, giving us a second chance at this stock. And, obviously we know this was a multi-$100 stock a while ago, and it's sorted itself out, and it's now trading more conventionally. And I think there's great opportunities to the upside.
Okay, Alan, thank you for that. And let's take a look at the technicals. Rick?
Right, so a breakout above resistance and then a retreat back to that same level that now becomes support, a pretty common situation in trading that Alan was describing. And this is where it was happening. We had our high point here, 72, after a big rally to the upside on earnings. We crossed above that point initially then, and now, more recently, we're finding ourselves retesting it. So the old resistance has become new support, and now we are in danger of falling through it to the downside here. I don't have the 200-day SMA on this particular chart, but we can see that after price has fallen below the two shorter-term moving averages, yellow 21-day, orange 63-day, now within these past few days, we are failing to retake the purple 252-day, the longest term moving average that we have here, the most important one by that measure. So we are in our downward sloping trend line here, RSI moving lower but still above that oversold area here. So a situation where if we do get a further push to the downside, it could take us back down here. Our volume node area, you can see, stands out here around 68. And then we had another key low here near 66. So 66 to 68 to the downside. Then we have our confluence of our -1 standard deviation channel and our purple 252-day EMA and our nearest volume node here all around the 74 level. So if we were to break through that point, the next area to watch right here, our next set of lows, and then almost the high point after our gap down near about 78.
Okay, thank you for all of that. Great charts today there. Rick Ducat, Alan Nuckman, final thoughts.
Well, I like the way the Zoom is set up, and we're at a key level just like we are in the stock market. So that's the reason we trade options, so you don't have to be completely precise and when this bottom is in play. The June options have plenty of time, and if you look out the 2-month options, this is a 3-month options, the 2-month options hold their value very, very well. So you can look and see where we are a month from now and make a decision whether we want to salvage this position or not, and let things make their moves, because there's going to be some price movement, and that's what we want as traders. We want the markets to move. We sort it out. We lean on key levels, and we trade high probability positioning.
Okay, thank you so much. Alan Nuckman, bullseyeoption.com, Rick Ducat. Thank you both for the big three today. Looking at some really hot stocks today, looking at SMCI, which is a big laggard in the S&P 500 today. Also Colgate and Zoom. Coming up next, a spotlight on luxury real estate, because luxury real estate is sort of immune to what regular real estate is experiencing. Dolly Lenz and Jenny Lenz will join me next.